Welcome to Global Wafer's Q1 2019 Results Conference Call, and thank you for standing by. At this time, all participants will be in a listen-only mode until the question and answer session of today's conference. At that time, to ask a question, please press star followed by the number 1 on your phone and record your name when prompted. Today's call is being recorded. If you have any objections, you may disconnect at this time. I would now like to turn the call over to Sunny Lin, analyst from UBS. Please go ahead.
Thank you, Grace. Good afternoon and good morning, everyone. I'm Sunny Lin, Asia Semiconductor Analyst at UBS. It's our great honor to host Global Wafer's management today for their Q1 earnings release. Now let me pass to Mr. William Chen, the spokesman of Global Wafers, for opening remarks.
Thanks, Sunny. Hello, everyone. Welcome to join Global Wafer's 2019 first quarter earnings conference call. I'm William Chen, Global Wafer Vice President, as well as company spokesman. We also have Doris Hsu, Chairperson and the CEO of Global Wafers, in this call. Doris will give us some executive comments later, and then I will present the 2019 Q1 financial performance. The final Q&A session will be hosted by Doris as well. For today's presentation file, we had just uploaded on our website around 2 hours ago. If you do not have the file on hand, please access into our website to get the most updated file. Please note, some information during our discussion today will consist of forward-looking statements, which are applied throughout the call and this presentation. These are subject to significant risk and uncertainty. Actual results or trends could differ materially from our forecast. Please refer to the safe harbor notice in our presentation. Now, I'd like to turn the call over to Doris for page 3, executive comments, and I will report you our 2019 Q1 operational performance after. Doris, please.
Thank you, William. Good day, ladies and gentlemen. Thanks a lot for attending our earnings calls for the first quarter of 2019. Again, this quarter is another very good quarter for Global Wafers. It's another record-breaking quarter. We have the very best ever performance on many indexes, such as gross margin, EBITDA, operation income, net income, EPS, cash, net prepayment amount, and so on. The only key index which is not record-breaking in Q1 is our revenue. Our Q1 revenue was slightly lower, or just about 0.2% lower than Q4 last year, which was our record high. William will present further details of those figures later. In general, our utilization rate is still quite okay. The utilization rate of small diameter, which means that 150 millimeter or below, is much lower than 8-inch and 12-inch lines. The best utilization is our flow zone production lines and our SOI production lines. Flow zone and SOI are both still fully loaded up to now. In general, semiconductor market demand now is indeed weaker than 2018. Worldwide silicon wafer shipment area sold in Q1 2019 declined as well. As a long term, I think we explained quite several times that GWC has a lot of LTAs with our long-term customers. As a long-term business partner, for the sake of LTA fulfillment, we did offer some flexibility to our LTA customers, such as some shipment adjustment and some product swap in Q1. Our plan is to keep the same practice in Q2 as well, to keep high fulfillment, high attainment of our LTAs with our long-term partners. The whole semiconductor industry market is stabilizing. I think Q2 2019 should reach the peak of inventory in the industry. Inventories will be going down from end of Q2 or Q3. please understand that the comments I'm making here is for the industry, not for GWC. GWC overall inventory level is always very stable. It's always at the range of 7 billion NT dollar. So even end of Q1 2019 is still same. It's just about 7.1 billion NT. So our inventory level is stable, but the market inventory, the whole industry inventory level is still high right now. But we think that Q2 will be the peak of the inventory level, and it will go down from end of Q2 or Q3. I think we will see more recovery from the second half this year. However, there is some unexpected development of the U.S.-China trade talk, especially yesterday. Some potential unexpected issues are ongoing. So I think same as any uncertainties of macroeconomics, and whenever there's any uncertainty arose, the uncertainty definitely always will make the industry a little bit more unpredictable. So we believe that the uncertainty from U.S.-China trade talk might impact semiconductor industry recovery schedule. So this is our view. Last but not the least, I would like to share with everyone our view of the market demand by applications. I think automotive, power control devices, image sensors, 5G related devices are the main driving force for our future growth. We have a lot of new samples for these specific applications under qualification now. So no matter how many macro uncertainties out there, I think these applications will be growing very positively in the next several years. These applications also will play a very important role for the industry recovery as well. I will stop my comments here. William will give all of you more detailed and comprehensive presentation of our Q1 2019 overall performance. Thank you very much. William, please.
Okay. Thank you, Doris. Let me continue the 2019 Q1 financial results detail. Please turn to page 4, 2019 Q1 financial highlights. In 2019 Q1, GWC reached the second high revenue in company history. At the same time, we had many record-breaking financial results in following aspects: gross margin, net profit, EBITDA, EPS, also the net cash position and prepayment. Number one, revenue. It's the second high in GWC history with 12% YOY growth. Number two, gross margin, net profit, EBITDA, and EPS. They were all record-breaking in GWC history. Number three, loan. We had reduced 85% of bank loan in 2 years. Number four, cash. For net cash position, we possessed the near 39 billion NT dollars. For free cash flow, GWC generated 5 billion NT dollars from operation, representing 32% of revenue. Number 5, prepayment. By 2019 Q1, we had 23 billion NT dollars prepayment on the book. For this item's detail, I will explain more in later pages. Page 5, YOY financial highlights, 2019 Q1 versus 2018 Q1. Comparing to 2018 Q1, we had all items significant YOY growth percentage in 2019 Q1, especially for EBITDA, operating profit, and net profit. All these YOY growths were higher than 30%. For revenue, we achieved a sales revenue 15.6 billion NT dollars in 2019 Q1. That was 12% YOY growth comparing to 2018. For EBITDA, we had all-time high 6.4 billion NT dollars in 2019 Q1. It's 30% YOY growth from 4.9 billion in 2018. In terms of EBITDA percentage, it had YOY 6% increasing from 35% in 2018 Q1 to 41% in 2019 Q1. This 41% EBITDA percentage was also the all-time high in GWC history. About the operating profit, it was also all-time high, 5.2 billion NT dollars in 2019 Q1. That's 33% up from 2018. In terms of operating profit percentage, we had reached as high as 34% in 2019 Q1. That is 5% higher than 2018. For net profit, comparing to 2018 Q1, 2.8 billion NT dollars, GWC earned another all-time high, 3.9 billion net profit in 2019, with 39% YOY growth. Besides, 2019 Q1 net profit percentage had been rising up to all-time high 25%. That was 5% more than 2018. About the EPS, GWC also earned a record-breaking 8.88 NT dollars in 2019 Q1. It was 2.52 NT dollars more than 2018 Q1, or say 40% YOY growth. For ROE and ROA, we reached a 34% ROE and 15% ROA in 2019 Q1. That was 3% and 2% YOY growth, respectively, than 2018. Page 6, QOQ financial highlights, 2019 Q1 versus 2018 Q4. As known, worldwide semiconductor market demands were turning softer from the peak in middle of 2018. Some customers, quarter by quarter, started adjusting their demands from all five wafer makers in the world because of their inventory piped up. However, in 2019 Q1, GWC still reached the second high revenue because our LTA signed with all major customers. More important, we had great LTA execution rate in Q1. There was no LTA breach, no ASP adjusted, no annual committed quantity amended in Q1. From this QOQ comparison table with 2018 Q4, you can see in 2019 Q1, we maintained the same level revenue, ROE percentage, and ROA percentage. At the same time, all the other items were with significant QOQ growth percentage than Q4, especially for the net profit percentage, EBITDA percentage, and EPS. They were even further pushed up from Q4 high numbers to reach company all-time best result in Q1. Page 7, revenue keeps strong stand. Despite the relative softer market demands from 2018 second half, GWC kept a strong stand and continuously generated the same high level revenue as 2018 Q4 to earn 15.6 billion NT dollars in Q1. As mentioned in previous pages, it's mainly driven by Q1 LTA well execution and high capacity utilization in 300mm and 200mm. Besides, we had reached a 41% gross margin in Q1. It's the first time GWC's gross margin was higher than 40%. Of course, it's definitely the all-time high gross margin percentage in GWC history. Page 8, EBITDA and EPS. For EBITDA, we achieved the EBITDA 6.4 billion NT dollars in Q1. Its all-time high EBITDA accounts for 40.8%. That is 2.3% up than previous quarter. For EPS amounts to 8.88 NT dollars. It's also the best ever in GWC history. Page 9, financial leverage. For net cash, our net cash position continuously grows significantly, reached to 39 billion NT dollars. It's 6 times compared to 2017. Also growing 11% from 2018 Q4. indicating GWC has a healthy financial condition for future growth. As chart, 2019 Q1 cash amount 39 billion NT dollars, which was including the prepayment 23 billion NT dollars. For prepayment, as mentioned earlier, our significant capacities were booked by price-protected LTA with cash prepayment that accumulate up our net cash. 2019 Q1 prepayment was slightly increasing 0.2 billion NT dollars in Q4 because a couple new LTA signed in Q1 also received the prepayment. For total bank loan, we had repaid all bank loans associated with the acquisition of some Edison Semiconductor in December 2016. We reduced the bank loan by 85% in 2 years. Our bank loan in Q1 was as low as 4.3 billion NT dollars only, which was further reduced 1.2 billion from Q4. Page 10, dividend payout. Same as usual, this year, GWC will keep high dividend payout policy in bring out profitable earnings for shareholders. We had proposed a historical high cash dividend of 25 NT dollars per common shares to all shareholders to be convened in GWC 2019 AGM on June 25th at Hsinchu Science Park, Taiwan. This 25 NT dollars dividend is scheduled to be paid in this August. Page 11, income statement. In this page, just recap. 2019 Q1 results in listed item, gross profit, EBITDA, operating profit, profit before tax, net profit, and EPS. In terms of amount and the percentage, they were all-time high in company history. All of NAND had a significant growth in NAND 2018. Page 12, balance sheet. In previous pages, we had already adjusted two financial key items. Further reduced in bank loan 1.2 billion NT dollars and possesses higher cash position 3.7 billion NT dollars. This came out the greater result of shareholder equity continuously increasing from 43.2 billion NT dollars in 2018 year-end into 47 billion NT dollars in 2019 Q1. Regarding inventory, given the market demand turned softer since 2018 second half, we still will manage the inventory as low as 7.1 billion NT dollars, which was a similar level as 2018 year-end. Above is my presentation for 2019 Q1 financial results. Thank you. Next, I would like to hand over to Doris for Q&A session. Doris, please.
Thank you, William. Thanks. So that's all of our presentation, and any questions are welcome. Thank you very much.
Thank you, William and Doris. So let us begin the Q&A session. So as a reminder, please limit your questions to 2 at a time. So I would like to start with 2 questions from my side, if I may. Number 1, so how do you see the overall semis demand outlook now versus 3 months ago? So by logic and memory, and also by 12-inch and 8-inch. And my second question is regarding the full-year guidance. Does management have an updated guidance for full year in terms of pricing and also shipment? And what's your expectation on revenue split between first half and second half?
Okay, thank you, Sunny. First of all, if we compare with current demand versus 3 quarters, you mentioned that last year, 3 quarters ago, 3 months ago, the second half of last year, actually, of course, right now, the demand is much weaker. The whole industry demand now is much weaker than last year. But the market is stabilizing. In general, small diameter is very weak. 12-inch, right now, 12-inch demand demand for 12-inch is a little bit weaker than 8-inch. I think 8-inch overall demand is, by diameter, 8-inch demand is the strongest in our product mix, especially for 8-inch product, 8-inch SOI, 8-inch flow zone, 8-inch epi. These are stronger than all the other 8-inch products. So this is my first comment. And if we compare the demand by application, I think memory is weaker than many of the other applications. That's our view. And memory inventory is higher as well right now. So we believe the market is stabilizing, but even the demand is picking up, but still our customers have inventory to digest. So the real silicon wafer demand improvement, this increase will be very mild, I think, in the next 1 or 2 quarters. But when the market recover, I think we will see very quick improvement on overall silicon wafer demand. So that's my answer to your first question. And for your second question, basically GWC's company policies that we don't really give any outlook, the projection of the whole year's revenue. So I'm sorry that we are not able to disclose our view of the whole year's revenue. But in general, from our current most updated viewpoint, I think second half, as I said in the presentation that we are seeing some stabilization of the market demand. So second half, and we are expecting some recovery from the second half. So second half overall revenue should be better than first half if there was no further unexpected development of the U.S.-China trade talk. So this is our view. But right now, because of the trade tension, some unexpected development, I think there are more uncertainties. I think maybe we will be able to share more comments maybe in the next couple of weeks until that they work out some settlement. So that's my rough answer to your question, Sunny. Thank you very much for your question.
Sure, thanks. Just very quick follow-up. So I remember last conference call, you were guiding for full year ASP should be rising by low single digit. Based on the current visibility, is that still maintained?
That is right up to now. I think our Q1, obviously, our Q1 ASP is better than Q4. It's single digit higher than Q4 last year. So according to LTA, basically our Q2 ASP should be flat as Q1 because many of our LTA prices is adjusted every 6 months. So Q2 should be very close to flat or slightly higher than Q1 because some Japanese LTA is starting from Q2, calendar Q2 as the first half of the year. So LTA price Q2 supposed to be slightly higher than Q1, and the whole year ASP should be better than last year. But again, I think there are some uncertainties out there. If the whole macroeconomics affected a lot by the U.S.-China trade developed trade tension, trade wars discussion, there may be we don't know how much this will affect the whole demand, macro demand. So far, we hope no impact, but there are still some uncertainty. So without those unexpected issue, I think in general we hold our view that 2019 the price, our ASP should be low single digit higher than 2018. Thank you.
Got it. Thank you very much, Doris. Congratulations on the very strong Q1 earnings. So, operator, would you please open the system for Q&A?
Thank you, Sunny.
Thank you, Sunny. Thank you, Sunny. We will now begin the question and answer session over the phone. To ask a question, please press star followed by the number 1. Unmute your phone and record your name when prompted. Your name is needed to introduce your question. To cancel your request, please press star followed by the number 2. One moment, please, to see if we have questions. Our first question comes from Donnie Tang. Your line is now open.
Thank you, Chair Lady and William, for taking my question. I have two questions. First question is regarding to the wafer shipment in first quarter. I'm wondering what's your wafer shipment in first quarter compared with last quarter, and due to SEMI organization announced the first quarter global wafer shipment in terms of area declined around 6%. But overall, top 4 semi-wafer vendor sales growth is like relatively flat in first quarter. I'm wondering, except for, besides for the ASP increase in first quarter, is there anything we missed there? It's because I think the first quarter ASP growth should be quite moderate. So I'm not sure whether if there is any inventory in the supply chain or not. And secondly is that in terms of the monthly sales pattern, do you think that April or May should mark the bottom of this year if the inventory issue can be fully resolved by the end of the second quarter? Thank you.
Yeah, thank you, Donnie. First of all, wafer shipment. Our wafer shipment, you're right that the whole industry Q1 wafer shipment area is lower than last year. But GWC wafer shipment area is actually very close to last year, to Q4 last year. Our Q4 last year wafer shipment volume and also ASP, both of these two were very good. But Q1 this year, our ASP is higher than Q4 last year. ASP is higher, but volume-wise, it's a little bit lower. So our total result is that our revenue is 0.2% lower. So ASP is slightly higher, and volume is slightly, area-wise, is slightly lower. So overall, our revenue is 0.2% lower. That's our status, shipment status. In the inventory, I think Q2 inventory is the whole industry. Q2 inventory should be the peak. April, May should be the worst of the whole year, meaning that inventory should be the highest, and customers maybe try to push out. Customers, many of our customers are expecting second half recovery, so maybe they will be more positive to take a little bit more wafers in June. But April and May should be more conservative. That's our view. But as I explained earlier, that the U.S.-China the trade conversation, trade tension, this might affect people's confidence, the industry's confidence of the schedule of recovery as well. But it's too short. We need a little bit more time to monitor the response from our customers. So that's our answer to your question. I think Q2 should be the worst, the peak of the industry inventory. That's our view. Donnie, did I miss any of your question?
No, it's fine. Can we just simply say that because we have pretty high long-term agreement compared with our competitors, so probably their shipment declined much more than ours. Is that maybe a correct answer?
Yeah, that is correct. Basically, our customer, or most of the customers in the market now, is that they try to honor LTAs as much as possible, and because of the soft demand, so their total wafer starts is lower than before. So actually, when they fully execute, implement all the LTA, actually there is not much room available to buy any extra spot demand. So So that is why the volume impact for GWC will be lower than the other peers company who don't have that many LTAs. So your view is exactly what we are seeing now.
I got it. Thank you. I'll go back to the queue.
Thank you, Donnie.
Our next question comes from SV. Your line is now open.
Hi, Doris and William. Congratulations on the good results, and thank you for taking my questions. So my first question is regarding your gross margins. What drove the gross margin improvement in first quarter despite the flat revenue? How much of the improvement was from pricing adjustment, and how much was from the product mix or efficiency improvement during the quarter? And I will have a follow-up question.
Yes. Okay. Thank you. Yes, you are right that of the gross margin, 41% gross margin Q1, this is our record-breaking quarter. There are several reasons for this. Number one is because of ASP improvement. We have low single-digit improvement on ASP. And the second is, of course, product mix that helps a lot. As I explained on page 4 of my presentation, that I explained that in order to work together with as a long-term business partner, in order to work with our LTA customer, we try to be as flexible as possible to accommodate with our customers for their product mix or product swap, or especially for product swap. So that means that more of our customers need advanced product or epi product than the ordinary polished wafer. And in the past, they need more test monitor wafer, but now they need the product mix change a little bit, so a little bit more advanced products. The demand for advanced products is more than low-end products. So this product mix change that help us to improve our gross margin as well. So I think that is the main reason. And so ASP improvement is one reason, and product mix change, this is another reason. But it's very hard for me to distinguish that how much is from price ASP improvement, how much is from product mix change. But total, these two are the key reasons for the overall gross margin improvement. I think another reason, which is not really a reason, but I would like to also share with everyone, is that actually Q1 this year, our overall CapEx and depreciation is still very flat. So that is the reason that our overall COGS is still very, very same as before. So as long as that we have good ASP and good product mix, then our gross margin will be higher. The reason I'm pointing out this one is that when we, as I explained in the last several earnings calls, that we have a project an expansion project in Korea under construction. So when the new capacity is released, then our gross margin will be a little bit, our overall depreciation cost will be a little bit higher than today. So right now is in a very good condition now.
Thank you. That's very clear. So my second question is regarding your new LTA in first quarter. What are the main applications, and are they for the shipment beyond 2020? Are these new arrangements bundled with your current LTAs? Does it allow the customers to push out the shipment in your existing LTAs if macro uncertainty continues?
Yeah. Thanks for noticing this point. Actually, you are very right that we do have some new LTAs signed in Q1. If you check our net LTA amount, end of 2018, our LTA amount versus end of Q1 2019, the LTA increased, net LTA amount increased by 200 million NT dollar. It's not a big money, but please bear in mind that we repay some prepayment in January as well for their Q4 last year fulfillment. So with this net result, we still have 200 million net increase. That means that we do have some new LTA with new prepayment. And these new LTA prepayments mainly for some special applications. Most of them are for SOI, and some of them are some special 12-inch products. And another part of that is some follow-up payments of existing LTAs. You know that we have some of our LTAs have several 2-3 installments of the prepayment. So when we receive new installments of existing prepayment, that will increase our net prepayment amount as well. So that's that's why we have higher LTA prepayment net amount. So it's not only new LTA, but also some new money, next follow-up installments of existing LTA. So I hope this is clear.
Just a quick follow-up. Does your do you have will you consider to just renegotiate on the? I mean, your customers could potentially consider to renegotiate hello?
Yeah, sorry for missing your question. I understand that you asked this question. I missed my answer to your question. For the LTAs, of course, some customers they wish to have some push out, but as I explained, up to Q1, I think all of our LTA attainment is very high. Our attainment is higher than 99% of our LTA. Basically, LTA attainment is extremely high. But that doesn't mean that all of the LTAs are 100% executed exactly same as the LTA. As I explained, we provide some flexibility to our customers. When I say flexibility, I mean the shipment adjustment, like that, in a quarter, the shipment doesn't have to be even every month. So we try to provide some flexibility so the linearity will be not as good as the original expectation, but basically from a quarter revenues viewpoint, it's stable. So this is the first flexibility we are providing to our LTA customers as a long-term business partner. And the second flexibility we offer to our customer is product swap. So that means that if they need more products of that product A, but they don't need that many for B, then although they in the LTA, maybe they said that I want to have this volume of A, that volume of B, but for the LTA, we understand the current market situation. So as long as that they swap the demand, basically as long as that we can fulfill, we will work very closely with our customer to meet their demand to swap the products. So that's the flexibilities we are providing to our customer. Up to end of Q1, all LTAs are fulfilled. No push out, no renegotiation on the price or delivery. So basically, it's a swap or non-linearity, non-monthly even shipment. Those are the flexibilities offered to our customer in Q1. Thank you.
Okay, thank you. Just a very quick follow-up. Will you allow your customers sign new LTAs for shipment beyond 2020 and renegotiate on pricing if demand stays soft?
Yeah, we are. If our customers want to sign any LTAs beyond 2020, we're very, of course, welcome to sign any LTAs beyond 2020. Actually, we have quite some LTAs, even 2021, 2022, or even 2025. So we do have long LTAs beyond 2020, but we never accepted any renegotiation on the LTA price, no matter the LTA is valid through 2020 or 2025. LTA is LTA. So we don't. Up to now, there is no price renegotiation for any LTAs. That's our position. We do our best to support the flexibility, but basically not price negotiation, and not push out. So this is our policy up to now.
Okay, thank you. That's very clear. I'll be back in the queue.
Thank you.
Thank you. Our next question comes from Sebastian Ho. Your line is now open.
Hi, thank you. I have two questions. The first is on the can you remind us again how much of your capacity is protected by LTA in 2019, and what's your forecast for 2020?
Okay. So this is the first question. Do you want to give me your second question?
Right. My second question is in terms of the pricing outlook for second quarter. So on the presentation slides, it mentioned is stabilizing. So if we look at the LTA part, which you mentioned, that's going to be flat to slide up. But how about the non-LTA protected part?
Yes. Okay. Thank you, Sebastian. First of all, to answer your question for 2019 LTA coverage, our 200 millimeter LTA, 200 millimeter and 300 millimeter LTA coverage for 2019 is higher than 80%. 300 millimeter LTA coverage is slightly higher than 200 millimeter, but both of these two are very high, higher than 80%. But for 150, it's very low. It's lower than, I think it's lower than 2/3 of our capacity. That's 2019. In 2020, sorry that up to now we haven't disclosed this number to the market because of some special LTA, new LTAs under discussion. So we cannot disclose our LTA status for 2020. And your second question, just a second.
Non-protected portion of the...
Okay. So, yeah, you're right that for the non-protected portion of our capacity, actually, the market is stabilizing. But meanwhile, I said that in Q2, the market demand is stabilizing. But Q2, the industry inventory is the peak. It's very high. So I think that Q2 for non-protected, non-LTA capacity, actually it's very difficult. I think the demand will be weak, will be still very weak, even the demand is stabilizing. But all of our customers will try to digest their high inventory first before they buy any non-LTA products. So our view is that Q2 non-LTA products, LTA price will be, I think price erosion is lower, but actually demand is lower as well. So I would say that Q2, basically non-LTA business is not so price sensitive because demand is, I'm not telling that demand is weak. Demand is stabilizing, but inventory is high. So our customers will try to digest their inventory on hand first before they buy any extra non-LTA product. That's our view for now. But as I said a couple times today, that the U.S.-China trade talks might change a lot of strategy here, or the macroeconomics view as well. So we will monitor and check the status in the next couple weeks.
Okay. Just to clarify, because if I look at the page 3 of your slides, on the third bullet point, you mentioned in Q2 expect a less price erosion compared to previous quarters. And when I look at your numbers in the first quarter, I think Doris, you already mentioned that it's single digit up because of the LTA effects. And moving to second quarter, LTA part is only flat to slightly up. So how does the comments compare to what's really reflected in your numbers? It seems like a little bit what's missing. What's the disconnection between the numbers and your comments on page 3?
No, I think there's no disconnection. I think my point is that price erosion is less in Q2. The reason for this is that it's not that price is sensitive anymore. Customers are not pushing for lower price. Actually, they want to digest their inventory. So we ask customers to honor their LTA first. So no matter what, they have to take the LTA quantity first, and then they will digest their inventory on hand. So they won't buy wafers because that someone offered the price $2 lower than current market price. So that's our view. So I think my comments here is that Q2 is not very price sensitive because all of our customers the goal is trying to lower their inventory as much as possible for now. That's our view, current view. I hope this is clear.
Okay, I understand. Thank you.
Thank you, Sebastian.
Our next question comes from Charlie Chen. Your line is now open.
Hi, good afternoon. Hi, Doris and William. Thanks for taking my question. So I got a couple of questions here. So first of all, we remember your previous gross margin guidance for full year was 39% to 39.5% for the full year. Right? But given your 1Q gross margin is already 41%, are you changing your full year guidance here?
Okay, thank you, Charlie. First of all, we don't really give any guidance on gross margin, so maybe some of the market analysts their projection. So we don't give the guidance. And secondly, 41% is our all-time high in Q1. But as I said that maybe the second half our depreciation will be a little bit higher. We cannot give any guidance for our gross margin or any other numbers for second half.
Okay, that's fair enough. And my second part of question is about the potential production costs, right? Because based on your comments, it seems like you care much more about the pricing, can be flexible about the shipments. But if you compare, current foundries or memory fabs utilization versus the raw wafer supply, you still see like a 10% to 20% gap in first half, right? So according to my simulation, I really think even you see a kind of seasonal recovery in third quarter for those foundry customers. I think you are going to see an oversupply still if you still running at 100% production, right? So in any case, you will consider to cut some production in the second half because as you just commented, your customers are also digesting inventory. So I think there seems to be a big issue now.
Yes, Charlie, I think I agree with you that even the market is stabilizing, even the third quarter, because of seasonality, that the demand will be a little bit stronger, but still, overall capacity, I think for silicon wafer, for now, I think is still oversupplied. That is very true. And if everyone run 100% production, I think it's still oversupplied. That is very true. But because of the LTA, I think our customers, as long as that the demand is improving, if the demand is market stabilizing and demand is getting better and customers will digest their inventory, then we believe that most of our customers will still honor the LTAs. That's our view. But I agree that for those non-LTA part, even for GWC non-LTA part of capacity, that will be still challenging. I agree with you. Because the whole industry inventory will be still high. But second half, I think peak will be Q2. Second half inventory will be getting better and better, meaning lower and lower.
Thanks. And lastly,
in general, I think 2019 the whole wafer supply is still, unless all the wafer makers lowering the production rate a little bit, otherwise the supply is still quite challenging. That is true.
Thanks. And lastly, thanks very much. And lastly, if I may, I really want to clarify these so-called spot price versus LTA or contract price, right? Because we heard different versions about spot versus contract price now. So first of all, can you give us a sense about the spot versus LTA price premium for the AP wafers today?
For AP wafer, we don't have any spot orders for AP. 100% of our AP is LTA, so no comparison.
Okay. Yeah, but for the kind of market price, I mean, for your industry peers selling AP wafers at a spot, how does it compare to overall LTA price in the markets? Yeah, so what I'm trying to get is that the LTA price seems to hold up very well currently. There could be because spot price is still slightly higher, but once spot price kind of cross over the LTA, I'm a little bit concerned whether customers will come and try to negotiate the LTA price again. Basically, that is my question.
Understood. I think for now, as I explained that right now, at least up to now, customers still honor LTAs, and demand is weak, so there are not that much demand for spot for non-LTA wafers. But we believe that non-LTA wafers price will be very close to LTA, but slightly lower than LTA. Should be single digit lower than LTA. That's our view. But as I said, that we don't have much LTA reference data, so that's our rough estimation only.
Okay, so assuming that spot price will be lower than contract price, do you expect more pricing pressure to come? Right? I know you run GWC very well, right? But you mentioned that you are the CEO of for example, Silicon Works, Formosa Semco. You are sitting on a big inventory, and you have to dump those inventory in the spot markets. What would that impact to the overall contract markets? Right? Because I think essentially it is still a kind of commodity markets, right? So I really want to get your thoughts on this.
It's not really commodity market unless you get qualified. Otherwise, no matter how low you want to lower your wafer price, customers cannot use. So first of all, you have to be qualified. So it's not really commodity. And secondly, because of the prepay, if the price gap is just is small, I don't think that our customers will give up their prepayment to buy. When they give a prepayment, that doesn't mean that's not only money they lose their prepayment, but also the partnership as well. That's a lot of commitment. So it's very hard for me to comment on this one. I know that some of our customers have some of our peers, they do have some inventory, high inventory, but we don't know that what kind of inventory they have. Is that polysilicon or finished good or what? But again, it's not commodity. So if they really lower the price, I don't know, many of our customers, semiconductor industry is quite different. These customers they have very good reputation for honoring their commitment. So I think customers unless as I said, unless the macroeconomic really looks pretty bad. Otherwise, customers will try their best to honor LTAs, and we will work very closely with customers as well. If the macro really that bad, then we will have to think about that, how to work together with our customers to overcome the difficulty. But right now, I think so far everything is still okay.
Okay. Thank you very much.
Thank you, Charlie.
Our next question comes from Sebastian Devon. Your line is now open.
Yeah, thank you very much. I have two questions. One is basically on inventories. I heard that basically one of your end clients has actually so much wafer capacity, not only raw wafers but also finished product, that basically the storage is full. So is that something you have heard from any of your customers, and how will you deal with that? Because basically they would not be able to respect their LTA. That's the first question. And the second question is, clearly you signed new LTAs in the first quarter. Is the pricing still incrementally creeping up, or should we assume that number is more the same of the LTAs you signed last year, or do we see a decline? Thank you very much.
Thank you, Sebastian. To answer your question one, inventory, yes, we do hear something similar from some of our customers, and that's true. Some of our customers, they do have high raw wafer inventory, WIP, and finished good, and they basically they use a lot of their warehouse, or basically all of their warehouse space. We heard about this kind of info from some of the industry people. So for that kind of situation, we work very closely with them. We try to work out solution together, but that's very few. That's very few. I think most of the industry players' inventory level is high, but not that crazy high, so it's still manageable. So this is our answer to your question, and I'm sorry that I cannot disclose that which customers' situation is like this and that. But we do have this kind of information as well. Secondly, the price for new LTA. So far, the price of our new LTA basically price either flat or slightly higher than previous LTAs. That's our company policy, and that's our actual LTA status for Q1. So that's our current policy. We still hold our position that we don't sign any LTA at a lower price than current price. So that's our policy. And that's our actual Q1 LTA status.
Yeah, thank you very much. Yeah.
Thank you.
Well, in the interest of time, maybe let's take the last question from the line.
Sure, we have a question from Julie Tai. Your line is now open.
Wow. Okay. Few of my question actually was asked already by previous analysts, but I just want to have maybe one quick one on the dividend payout. In your presentation, you did mention that a $25 will be paid out for the 2019 earnings, and this is about 80% of the payout ratio. It is actually relatively low since 2013. So, Doris, could you give us a bit of guidance on, are you keeping a steady payout ratio or a cash dividend yield or in absolute dollar? Because it is quite difficult to track that in the past few years, we're giving the volatility of the earnings.
Yes, thank you, Julie. Our dividend payout, 25 NT dollar per common share. This stands for 80.2% of our total earnings. I think this is a very high payout in Taiwan, In the past, in our history, I think we are always ranging from 79 to, for some specific years, 80 something, and only 2016 because of some special arrangement we had almost 100% payout. So 80% is extremely high payout, and our total amount is 10.88 billion NT payout in one shot. This is a big payout as well. The way we set the dividend payout, there are several factors we have to take into consideration to decide the dividend payout. One is, of course, our EPS, our final EPS, and the second is our forecast of next couple years CapEx capital needed for our future plan. And the third is also we have to check some other special project ongoing. So this year we put all of those factors into consideration. We believe that 25 is a very appropriate number to propose to the board and to the shareholders. So we are going to have our annual AGM 25th of June, so we will propose 25 as the number to the shareholder. I think this is a good number. This is an okay number.
Okay, thank you so much, Doris.
Hi, thank you, Julie.
Speakers, that's our last question for today.
Thank you very much, everyone. Thank you again for attending our earnings call this quarter. Thank you. Have a good day. Thank you, everyone.
And that concludes today's conference. Thank you all for your participation. You may now disconnect.